but we will charge them approximately half of what they are and have been charging us. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So,
whoa. So last week was wild, right? We had massive drops in the stock market, massive rallies in the stock market. Nobody knew exactly what was going on. And I have been getting asked nonstop by people, how do these tariffs impact venture capital? So I thought I would share my thoughts on all the things that I've been reading and thinking about. Here's the thing, 2025 was supposed to be venture capitalists' year after wandering around in the wilderness for like what's felt like a decade. But I mean, really, it's only been like 2 or 3 years, but still a long time. What do I mean by that? Well, if we go all the way back to 2020, we had COVID, right? And the government printed a ton of money and we all got like stimmy checks and everything was great, but then there was all this money and it was chasing after lots of deals. And so you saw valuations skyrocket in 2021. So what happened in the world of tech? Well, all of these tech companies raised at higher and higher valuations that were unsupportable based on the current performance of the business. Then what happened is kind of the music stopped. We realized there wasn't quite that much money to continue chasing after these deals and supporting these super high valuations. And so valuations started to come down. But companies didn't want to raise at lower valuations, which meant that for the last several years, the venture capital market has been pretty quiet. Not a lot of deals have gotten done, not a lot of founders have left companies, and it's just been kind of a rough period. And the worst thing is that there hasn't been a lot of liquidity generated for VCs or their investors, limited partners. What do I mean by that? Well, look at the IPO market over the last few years. Very, very few IPOs that have been done, and those that have been done haven't been in the tech sector, only a few. And even those haven't performed particularly well over the last few years. 2025 was supposed to be different because a lot of people felt that part of the reason why we weren't getting liquidity like IPOs and M&A is because there was a lot of uncertainty about who was going to be elected to be the next president. Was it going to be Harris or was it going to be Trump? And so that's why you saw markets really rally after Trump was elected. I think partly because there was just certainty finally. That was a big part of it, but also because a lot of people thought that Trump was going to be very business friendly. And so the stock market rose accordingly. But where are we today? The challenge is that between Doge and tariffs, it feels like there is a lot of uncertainty. We don't know what's going to happen and what's going to come out of the White House at any moment. And so that has led a lot of companies to pause fundraising, to delay IPOs, to delay acquisitions of other companies, and so on and so forth. And so the year that was supposed to be like, finally, like we're gonna get some liquidity again, really, really dried up. Like I was looking through my portfolio and maybe like upwards of half of my portfolio are companies that are good, strong, good growth, in some cases profitable businesses that could be publicly traded if the public markets were open. But instead, when tariffs were announced, one of my portfolio companies, Klarna, which was supposed to go public on Monday last week, decided to pull their IPO and wait indefinitely until the tariff issues are resolved and there's more certainty in the market, which has been incredibly painful as a VC investor who is really looking forward to getting some nice liquidity on our investments. The other thing is that this uncertainty has caused public markets to crash, and that's caused LPs, limited partners, and venture funds to rebalance their overall asset mix. What do I mean by that? Well, let's say that you're Harvard and you have an endowment, you have billions of dollars under management. You're not going to put all of that into private equity or venture capital. You're going to put a relatively small portion of it. And usually what happens is these endowment managers, pension fund managers, etc., they set like very clear targets. Like we are going to deploy 10% of our total assets into venture capital. We're going to deploy, 80% into public equities and so on and so forth. Well, when your public equities portfolio drops by as much as it did this last week, it forces you to rebalance, right? Because all of a sudden, like if your public equities just got cut in half, then all of a sudden your allocation to venture on a percentage basis just doubled. And so now as a manager, you're looking for ways to cut your venture exposure, which means you are definitely not funding new venture funds. And in many cases, you're looking to sell what are called secondaries. You're selling your position in that venture fund to somebody else who's willing to buy it. The reality, though, is that there's a lot more supply of those secondaries if all of those LPs start dumping their positions than there is demand to buy it, which, basic economics 101, when supply is greater than demand, you watch prices sink. So, for example, I've been hit up multiple times by different sellers this week with super low valuations on their investments who have basically said, hey, I see you're an investor in XYZ company. I'm willing to sell at upwards of a 75% discount to the last round or the current value of the business because I just need to get out, which is kind of crazy to see that happening that fast. Which might mean that it's a buyer's opportunity if you have cash and you're ready to move, but also we don't know where the floor is on this, and so that also causes a lot of uncertainty. The other way in which this all impacts venture capital and in not so great ways is we've been pretty antagonistic to pretty much every other country than the US, which makes it a lot harder for other investors in other countries to want to do business with us, buy products from our companies, plus not just to let alone the tariffs and the increased cost of doing so. It also means that they're less likely to invest in venture capital funds here in the US or invest in startups that are based here. And it might make it so that it's harder for those companies in those other countries to sell into our country as well, which sometimes you need different products and resources from other countries in order to build your product here locally. We've got some companies in our portfolio that have basically indicated that 15 to 30% of their profits could disappear due to these tariffs, and not just from the tariff itself, but from the inability to get product to manufacture it and produce it and sell it here in the US. For example, in Europe, we're already seeing venture activity drop by 4% in Q1, and it's probably gonna drop by even more next quarter. And I think you're gonna see that across the world. So what are my thoughts on all of this outside of venture capital? Well, let's talk about China because they're the big elephant in the room, right? All the tariffs got paused except for the ones on China. And in fact, those got increased, right?
Tariffs on China could get as high as 245%.
So what's going on here? Well, I really like this tweet by Matthew Prince, who's the founder of Cloudflare. Really, really smart guy who's really dialed in and connected with a lot of the movers and shakers here. And his opinion is, with the caveat that these are not idiots in the White House, which might be a big caveat to take, but if you assume that they're not all complete idiots, what is going on? If you think about it, China is an exporter. They sell stuff. And you think about the US, we buy stuff. We're the biggest buying market in the world. Everybody wants to sell stuff to us. And China, the biggest seller to everybody in the world. So when we put really high tariffs on them, I think ultimately it's gonna hurt China a lot more than it's gonna hurt us. Why? Because it's like my mom says, it's always easier to sell than it is to buy. Right? Buyers are the ones that typically have the power in the relationship. Unless it's something that's super scarce, which the reality is, the US is pretty unique in that we have a lot of natural resources, we have access to a lot of things, and so there's very few things that we absolutely desperately need to have to function as a society. Whereas that's not necessarily the same case for China. Also, if you think about all the reciprocal tariffs, so China immediately hammered back and said, we're going to increase all of our tariffs on you. Well, what are the things that the US is actually really good at producing? Well, we're really good at producing services, and we're really good at producing tech. Our tech is some of the best in the world, to the point that when we go to markets like China, the big challenge has been that they just rip off our tech. I mean, just look at Porsche. They brought the Taycan over to China, and a Chinese company duplicated it part for part and sells it for almost half the cost and has basically decimated Porsche's market for that car in China. So that's the challenge. It's okay, well, the stuff we're really good at that produces a lot of value in the world economy, China kind of rejects. And so even then, from the balance of trade perspective, it's we already aren't selling stuff to China, so there's not a whole lot to lose there. Here's my cautious hope. I'm not trying to play politics and I don't have a crystal ball, but my one hope is that if you look at the Trump administration, he has brought in a lot of technology leaders. People like Mark Andreessen, Ben Horowitz, Elon Musk, Peter Thiel, David Sachs. These are all people that not only are they heavily invested personally in the tech ecosystem and top tier venture capitalists and so forth, but also people that I think genuinely care about what's best for tech. And I'm hopeful that because they kind of have Trump's ear, given the amount of support that they've given him, both financially and otherwise, my hope is that they'll be able to steer the conversation back towards things that ultimately support what we're really good at in this country, which is developing new innovations and technologies and really pushing things forward to the benefit of everybody around the world. Anyways, what do you think about tariffs? How is it going to impact VC? How is it going to impact the US economy, the global economy? Do you agree with Trump and view this as a way for us to really level the playing field globally? Or do you think this is like the worst move ever and we're headed straight into a recession? Love to take this down into the comments and continue the conversation there. Thanks.